I'm the managing editor of Impact, and I'm really proud because this journal, to my opinion, well, it's really about alignment, because global warming, climate change, and also the impact of the built environment, well, it makes sense. It ticks all the boxes, and I think we're more and more aware of the fact that we should take an active role in the built environment to contribute on the global warming challenges. And so I'm really proud that we will actually launch it today. So who am I? That's me. So it's really now time for action. That's my one-liner when I wrote the introductory for the first issue. And it's really interesting to see that we collect actually all thought leaders on the topic. So topic of impact investing as ESG. So I'm really proud that, well, thought leaders like PwC, Heinz, Nuveen, but also Skanska are contributing to this magazine, but also companies like Park B, who are also from the mobility perspective looking at this, well, tough challenge. So in terms of, well, you could state what's about the internal side. We're trying to, well, elaborate on the fact, how can we make the existing real estate stock future-proof? How can we mitigate risk? What's the perspective of regulations? And also, I think very importantly, how can we create alignment in the value chain between the investors who are performing on ESG, but also the SDGs of the United Nations, and but also addressing relevant topics like valuation and measurement. So, yeah, it's really also a moment for me to celebrate, and therefore I would like to invite Rutger Schuur from Park B, Skanska, and also PwC. And there's even a bottle of champagne, so maybe you can give it. Yeah. So really happy to hand over the first issue to the editorial board members. Yeah, and there's always one with a bottle, and that's you. And that's for after this meeting, because we will have a really great drinks, networking drinks. So I think it's really nice to make a photo for the media. And also in the background, you see all the parties who are contributing as an editorial board member, or also on the insides. So, yeah, really pleased. Yeah, the background, yeah. That's self-promoting. No, really great. Maybe a big hand of applause for these thought leaders. And also happy to sit, because, yeah, it's also about the expert panel. And maybe the note on the Impact Journal, because we're now working on the COP26 issue. It will be published in Glasgow, of course. And also, yeah, what's really, I think it's impactful that we are the only real estate party who will be present at COP26. And that's really an important momentum to set the next standards in terms of climate change. So that's really great. And also a big applause to the team of Real Asset Media. So the expert panel, it's really, yeah, well, my fellow Richard will call it really a superb expert panel. Also happy to introduce the other partners, so please have a seat. So over here, we're having Paul Aramis for CBRE, also Michael Nauta for CMS, and last but not least, Andy Hay from Colliers. Have a seat, please. Yeah, so maybe in terms of a brief introduction, it's always good to, well, have some thoughts about who is the speaker, and also a bit of a corporate insight. So maybe Thomas Wies for PwC, a short introduction, please.
Yeah, thanks. First of all, thanks for the invitation to this panel, and also to this great magazine we published now with the first edition. Yeah, my name is Thomas. I'm partner at PwC. located in Frankfurt. I'm leading the real asset industry of PwC in Germany, combining real estate as well as infrastructure. And I'm also hosting or sponsoring partner for all our interdisciplinary ESG activities, where we support our clients since 2 to 3 years with a big wave of strategic implementation projects, legal projects, of course, focused on ESG. And this morning we just published also our tech map, impact map, focusing on digital solutions supporting the ESG journey.
Great. Maybe Arkadiusz Rudzki from Skanska, brief introduction.
Hello, everyone. My name is Arek Rudzki, and I'm representing Skanska, the global construction development company. We're operating in 3 geographies. This is obviously Nordics as a home market for us, US, with our operations there, and 4 countries in Central Eastern Europe, Poland, Hungary, Romania, and Czech Republic. I'm responsible for leasing and sales across those 4 countries. And we're delivering office buildings because I'm representing the commercial development arm of Skanska. As I said, we do construction and commercial projects as an investor. Then we try to lease these projects out and sell it to the ultimate investors later on. So happy to be here. Thank you.
Great. Rutger Schuur, Park B.
Thanks, Ron. I'm entrepreneur at Park B. Park B is a tech company and which can make with data and technology optimize the usage of car parks, bringing extra revenue to assets. For a long time, I'm very much engaged in creating a more sustainable building environment. I'm also active as the chairman of the Dutch Green Building Council, and I think that companies, well, like all these companies, and also like Park B, can contribute to a better livable environment in the city centers.
Yeah, really great. Andy, really pleased to be that you are on board from Colliers. Brief introduction, please.
Thank you, Ron. Delighted to be here this afternoon. My name is Andy Hay and I represent Colliers. Colliers is a global leader in real estate services and investment management. Globally, we employ around 18,000 people, operate out of 66 countries, and there's about 45 billion US of assets under management. My own role, I run the property management team across Europe, across EMEA, and some kind of scale on that. It's around 22 million square meters of real estate that we manage, and there's around 1,200 employees in there. So for me, you'll understand with those kind of stats, it's absolutely critical that we get clarity on where ESG is going, because ultimately it comes down to what's happening at the ground level on the asset. So we need absolute clarity around that.
Great. Maybe your neighbor, Michael, yes, from CMS. Regulations is key, so...
Regulation is key, yes, especially for the E. Thanks, Ron. Michael Nauta from Cologne here, from CMS Germany. We're one of the biggest law firms in Europe, especially in Germany, with 600 lawyers just in Germany. And we have seen that that ESG is more and more coming, and that our clients are asking also legal questions, not only technical questions concerning this topic. And my part, I'm from the real estate sector. I'm doing transactions, but in the course of due diligences, it's asked more and more the ESG criteria, and so I'm a member of a so-called task force of ESG that we have invented in by CMS, and yeah, we are developing some tools like Quick Check or something like this, so that we can be part of this revolution. Yeah.
Great. And Paul, of course, CBRE, feel free.
Yes. Last but not least, I hope.
Yeah, exactly.
No, my name is Paul Oremus. I work for CBRE Investment Management, formerly known as CBRE Global Investors. We changed our name last week. I'm the fund manager of the CBRE Residential Impact Fund, a fund which is launched by the end of August and has an initial capital of 500 million euros. We are the first impact fund of the company. We manage over 100 billion euros of assets over the globe. This is part of our residential strategies. For the ones who don't know, we have 10 billion of residential investments only in Europe. So we're quite big residential investor. And this is our first impact resi fund. And our impact theme is affordability. So that's very important to know. Sustainability is important, but we especially focus on the social part of ESG.
Really great. And also we would like to invite you, all the attendees over here, to be active and also critical. So if you have a $1 million question, please raise your hand and we will give you a microphone. And also it's nice to be aware of the fact that we have roughly 100 attendees online. So it's really a hybrid session today over here at EXPO Real. Coming back to you, Paul, because you had a nice one-liner, like you're the first impact fund. Maybe also elaborate on the why, because you're well, a global investment manager. What are the key drivers to focus on impact investment strategies?
I think the moment we thought about impact was also due to the fact that we would like to launch a European resi fund. And we did see that the markets were becoming more and more tight, which resulted in higher prices almost as we were in Europe. And initially we were a little bit afraid for that, because stepping into a market in which prices are increasing quite rapidly, that could also be a very big threat in the sense that regulation is coming in and it would hurt your strategy, but also your returns on the long term. So we tried to change that threat into a possibility, into a chance, and we thought, okay, we have now to build a portfolio which really serves the needs of everyone who is looking for an affordable house in Europe. So we tried to make out of a benefit of something what was a threat initially. And therefore we have chosen for that affordability theme. You should know that sustainability is already a very big theme within our company. We had a green label, we're still wearing it. Green is our color, which means that as international investors, we also would like to make a contribution to the Paris Agreement. The Dutch Residential Fund, for your information, is #2 in Europe, so we know what to do on sustainability, but the additional effect, the social part, we think should go hand in hand with the environmental issues.
Yeah, maybe going to you, Thomas, because from PwC you have a global perspective. Is it really the same story in terms of investment managers who are looking for impact strategies? What's your observation?
Yeah, I would in general agree that ESG is one of the 3 big topics every CEO has on his agenda currently. And from the real estate and real asset perspective, most of the investors think about it. They think about where do they want to position themselves. Do they want to be the leader or the follower, depending on where they want to approach and how they want to start and how much money they also want to invest to transform all this organization, because it's not just you say, okay, I want to be green and tomorrow I'm green. It's you have to start on the asset level, you have the fund level, and you have the corporate level, and it's really a journey. And if you want to do it, you should do it. Otherwise, we have seen in the press that there are some bad press about if you still try to do some greenwashing. And it's a journey, and in long-term view, there are so many stakeholders looking at this. And it's a growing importance. If you look at the investors, if you look at the financing banks, the insurance companies, the tenants are more and more looking at it. So for a mid to long-term journey, you have to focus on it. It's not, you can say, okay, I start today or I start tomorrow, it's fine. But in general, it's a journey. You have to move. And if you are already owning assets, we see the first signs that there is already a negative impact on non-green buildings on valuation. That's something will come over the next years, that you will have more and more stranded assets if you are not investing or doing anything. So it's a clear journey, and yes, but every player has to decide himself where they want to position, where's the ambition level, but to do nothing is not really an option.
I totally agree. And also, I think it's interesting to go to you, Andy, because going from investment manager's perspective also to asset and property management, what's your key thought and observation in terms of what's happening now?
So a few things, and it's interesting picking up on what my fellow panelists have said. I talked earlier about the need for clarity. One of the things I would say is we still desperately need that. I think there is a lack of clarity around what ESG is, the definition of the individual components. I think we're getting better as an industry, but we lack that clarity. I think if you then drill into, coming back to our world, if you then drill into what is the data around each of those, if you haven't got the clarity around what the definition is, the data is not going to be good. And so we've really got to solve that piece. We're happy to contribute to that, and I've got a few mechanisms for doing that. But the other piece, and it's a point that Paul made, and I was pleased you made it, was the S is increasing in value, because you don't have to go back too far to actually find, I suspect 90% of everything discussed about ESG was actually E. And actually, if I'm really honest, I suspect a lot of people thought the S in ESG was sustainability.
Yeah.
You know, so I think that is changing, but we absolutely need that. And I think it's coming. I think the taxonomy is helping. I think all kinds of things like that are helping, but there's a long way to go just yet. It's a journey.
Yeah, maybe also Rutger, because from the data to technology, and I think Park B, you're really in the, well, maybe in the middle, where maybe they think it's about mobility, but it's also about the crossover between real estate, infrastructure, data. What's your key observation where it should start, and also what's the value of data?
What we've seen is that the urbanization in the big cities will lead to doubling of the big cities in the coming 30 years. And it's already today it's very crowded there. And we think we can contribute to create a better building environment by adding more green to the city centers. And that is possible because I expect in the next decades the change of mobility, the uses of mobility, will transform city centers. And we think as Park B that there is enough space under the ground in car parks which are unused, and because you are probably not aware that the average occupancy of a parking spot is 15%, 15%. So we think there's enough space under the assets, but we should better make use of it. And that is possible with data and smart technology. Personally, I come from quite a traditional side of the real estate business, and I'm very impressed to see what data scientists working at Park B can have a different perspective and a different view on what you can do with real estate. And I think that's where PropTech companies are, well, slowly growing up now. We are not aware yet what data and technology can transform this quite traditional industry.
Yeah. Maybe Arcadius to you, because I think Skanska is a leading player. Is there any change of your scope in terms of work? Is it going from the more real estate side to, well, a broader scope of more infrastructure, way of working? Maybe give us some insights.
Yes, maybe I will start from like big picture perspective. So we are a construction company, so we all know how construction business is impacting on the environment. So it is one of the heaviest impact in general. So some time ago we set up our targets, how we want to reduce the CO2 emissions, and we set up the plan, the roadmap for reduction of the CO2 emission, and we said by 2030 we want to reduce by 50%, and by 2045 we want to reduce to be zero CO2 emission. Recently we put even more ambitious plan because we, like those few weeks back, we reviewed our plan and we put out on ourselves even more ambitious targets. We want to reduce our CO2 emission reduction by 70% till 2030. So knowing how big impact construction business has on the society, on the environment, and so on and so on. And this is our responsibility as a construction company, as also as a developers. Of course, from development perspective, we have like two aspects of this impact on the environment. So this is direct and indirect CO2 emission. For us, the most challenging, obviously, is this indirect, which is embedded in the projects we do. So obviously, so the whole value chain which we have for the production of our projects, including the concrete production and also so on, so on, so on. So this is like long story. I will not go into the details. But basically, like 3 aspects are super important for us. So sustainability was always on top of our agenda. Since the past, when we had some bad impact on the some society in projects in Nordics, Skanska decided to really put this on top of on the agenda of ours for everything we do. So all of our projects, I'm representing, as I mentioned, the development part of the business. We put our ambitions there needs to be on top of the top in terms of the sustainability. So all of our projects are certified in LEED, which is the technical certification, and we are reaching always the platinum level. Recently, we introduced to the market in Central Eastern Europe the WELL certification, which is also like the human-centric certification. So also our projects are getting the WELL certification for core and shell, and we're also working on the competences internally, also how to advise our clients to reach the WELL interior certification. This is a bit different scope, but obviously this is something which is very much on the agenda right now. Also, this what you have mentioned is like the social impact of this what we do. What we are building the office buildings in the city centers. We're trying to have the lowest negative impact as much as possible. So there's a lot of consultations with the local societies, how we can benefit, how they can benefit from this what we do on daily basis. This is basically for our commercial development, the office buildings and residential, multi-phase and multi-use projects to complement to the local society, increase the quality of life. Everything which is connected with the sustainability and the social impact is super important for us, and we put a lot of attention for that. Reduction of the the NOx emission by cars. We are selecting very carefully the sites where we build our projects to really fit into the existing infrastructure, to do not generate any extra unnecessary emission from the cars. Like you need to build outside of the city, you need to have a car or extra tram or bus line for that. So we try to contribute as much as we can in our business model to the local needs of the society and lower as much as possible the CO2 emission. So this is our mission. We put on ourselves more ambitious targets, and I think we're on a good way.
Maybe is it also possible to give some examples in terms of what are the social goals? Because great social impact, but make it smart. What kind of social goals are you setting?
Oh, it's very easy. How you design the project, for example, for the services on the ground floor of office buildings, which will contribute to the local society, not only to the tenants of the building, which basically have some needs, obviously. But what we do, we go much further. We do the social debates with the neighborhood, with the residents, how we can contribute, what they would like to get, what they would like to see in our project, how the placemaking, the greenery around the project. It's not only about the maximizing the profit, but this is the profit with purpose. This is our motto, how we do the business.
And also your own employees' perspective?
People are very proud working for Skanska, so
you are.
I'm very proud, absolutely. So no, this is absolutely, especially for the new generations, which is coming right now, how they are assessing the workplace, basically, for whom they will be working in coming years. Now it's not only the brand; it's really the agenda of the company regarding the ESG, the social responsibility. Now it's extremely important.
Maybe we can elaborate on the measurement and valuation of the metrics, so also maybe from the investment perspective, but maybe first go to the regulation side, because is there a lot of variety between, well, maybe even global regulations to local regulations? Or are we trying to create alignment between countries? What's your perspective from CMS?
Yeah, thanks, Ron. I think, well, let me start from a national perspective, because we had in Germany the new climate protection law, which is in place since July this year. And this reduces the climate goal of zero emissions from 2050 to 45. So this is what you said also. This is the main goal. And Thomas, like you said, we must make sure that we don't get stranded assets. So the main goal is to reduce emissions. And so this is the national German perspective. From a European point of view, I guess, yeah, Andy, you said it already, taxonomy is on. And I think that this is also what we have to focus on in the next years, because we have the first two objectives that have been defined now by the delegated acts, and this will come in the next months and the next years for the other objectives. And so we have to make a clear focus on the taxonomy regulation, so that we once get reduced the emissions, and then we get our buildings ready for the other objectives.
And do you think that we need to work on the penalty system in terms of when there's a measurement penalty when we're not performing?
Well, I don't think so, because you have two ways to guide the people. So either you get the chance to guide them through investments, and this is what EU regulation is doing now, also with the Fit for 55 program and also with the sustainability regulations. And I guess this is the right way. But of course, if this won't work, we have to think of other ways, but for the moment, I think that we just need to guide the investment.
And maybe Thomas, I see you disagree, or?
In general, I think I agree. But if you look, because you asked for a global view, if you compare the activities in Europe to global activities, and we have our global real estate calls every month, and everyone is looking at the EU and say, look, you are really moving. And then they ask, why are the EU members moving? And I said, yeah, it's just because the regulation is there. The real estate, real asset player, everyone has to move. And in the US, for example, usually the US is front runner and things like this. But in this case, it's a lot of talk in the US, but there's no significant push yet. And if you, the EU is more or less a front runner, I would say still, on the ESG agenda and on the push. And it comes from the regulation. Of course, there is a push from the tenants, as I said, from the lenders, from the investors, etc. But the real push comes from the regulation. So if you want to improve or push further, it makes sense. But it shouldn't be over-regulated. You should implement perhaps some market-orientated mechanisms like a CO2 price that will definitely. It's already changing something. Look at the gas station in Germany. You still get gas. The prices are increasing. That will be the same impact if we talk about the next targets after the climate targets on the EU level, the circular targets. There might also be a good price mechanism to do that. It's not. I wouldn't ask for more regulation, but I would ask for market-orientated solutions that help to transform faster than we are moving, because we have to move. Yeah.
And you were highlighting the US perspective already. What kind of best practices do you see overseas?
It's moving. I'm not the US expert, but if you compare EU to the US, of course, since Biden is a new president, there's a significant push into the infrastructure projects, and the regulation is also moving, but it's not there where we are currently. And hopefully that the COP26 conference now later this year will give an additional push globally, because you see on the taxonomy side that, for example, China cooperates with the EU on improving the taxonomy in China. Some other countries like Canada joined this activity. So there is a theme and the goal to have a more global standardized regulation taxonomy framework. Because it makes sense. I always say, look, if you are an investor, a German investor is buying something in Japan, for example, which rules do I have to comply to, the German rules or the European rules with my investment in Japan, and the other way around? A Japanese investor is buying something in Germany or in Europe. So what is the right taxonomy I have to look at? And it's still unanswered. So
well, let's ask the expert, because we have Paul with your global view. maybe just elaborate on the question of Thomas. Is there any standardization or taxonomy? Where are we heading to?
I think we're heading to a global taxonomy, but there's still a lot of room for improvement, especially when you have a view on a global level. Obviously, you have Europe, Asia, US, and also you have a different speed in that respect. But on the long term, I think we will head to one standard. Yeah.
Yeah, and also maybe in terms of benchmarking, we already highlighted the data side. Do you think there's a need for benchmarking also from your investment perspective?
I think there is already
so
a
maybe
benchmark.
next to GRESB, but also benchmarking social measurement, governance aspects?
I think the GRESB, to be honest, is a very good benchmark at the moment, which will evolve over time. You see there's now a lot of attention for especially the E side. So we really focus on environment and sustainability. I do expect that the social part will increase over time. So I hope that benchmark will develop itself, because I think that's the best way to go forward. And obviously it's very important to compare different funds, listed or non-listed, on a global level. So you make sure that if you would like to make an impact investment, that you really know for sure that you're doing the right decision. And we heard the word greenwashing already a few times today. Obviously still, I think there are some managers out there which spread the word, but really making the impact on an investment level, really making the change every day. I think that's what we're talking about.
And maybe also go to Andy, because is there still greenwashing on the asset and property management?
So look,
don't call names. That's it will be recorded. So
I'm going to pick up again something Thomas said earlier. This is a journey. What we don't want to do is stop people starting the journey. And sometimes the first few steps might come across like greenwashing, because you're just appointing whatever a global head of ESG or something like that. We have to be very careful that we don't prevent those steps happening. I mean, we talk about we have a whole array of clients. We talk about a spectrum of preparedness. And basically what it means is some people are right at the forefront of this and have already taken lots of actions, know their data, or have put structure in place or new systems in place to gather the data, corral the data, present the data. Others simply haven't. Others are largely just help. It's not too much more than that. And I think we need to acknowledge that, and I think we need to help those people that need to do it. There's good intention there. The other place I've touched upon already, where sometimes greenwashing gets thrown at it, is this a top-down approach? Do you know what, just appoint a global, it'll be fine, from a bottoms-up approach? Because in my perspective, is it really matters on the ground at the asset level? That's where it has to work. And I suspect you probably need both. Otherwise, you end up with lots of busy fools doing lots of detail down here with no structure. But if all you do is appoint the top person, it doesn't filter down to the asset level. So, of course, there is still greenwashing out there, but it's just, I kind of ignore it. It's almost just a too easy comment to throw away.
And maybe also a question on the measurement side. When you look at your core business, asset and property management, what kind of metrics are you working on, or your clients?
Yeah, so one of those I was thinking about earlier was we put in place a social valuation metric. Okay, so we attempt, it's just our own attempt, we attempt to put a quantification on the social impact. So the social impact, for example, of requiring our suppliers to the assets that we manage of an apprenticeship program, of employing people close to the assets, those kind of things. And of course it is not precise or perfect, but what it does, it gets the message across. We've got a social valuation calculation for you, and that's one of the areas. One of the other things, the global thing was interesting. One of the quantifications, the measurements I don't know too much about, but I hear good things about, is neighbours. No one talked about Pacific. I think of Pacific as being kind of quite positive and on the lead on this thing. And the neighbours methodology used down there, whereby my understanding is unless there is a threshold set for any building in terms of kilowatt hours used, some of you may know more about this than I do, if that threshold is exceeded, it prevents the landlord from charging out the excess cost in the common areas to the tenants. It puts the absolute responsibility and the financial penalty on the landlord if certain thresholds aren't hit. Now that's gets into a penalty impact, its regulation.
Yeah.
The other thing I hear is that it's had the impact of reducing energy costs on office buildings in Melbourne to a third the rate that they are in London.
Yeah.
Now, lots of stats in there, it'd be worth looking at, but there's some of the things that we are in the process of exploring in terms of hard metrics.
Yeah. Also the audience, so feel free, we don't bite. We also empower you to ask smart questions. Also Thomas, I think valuation, I'm really curious what's your opinion in terms of, do we see already when we're investing in real estate, do we see it in our internal rate of return models, or is it an acquisition yield question, or is there already a valuation of sustainability in general?
Yeah, it's a difficult, there's no clear answer yet. So if sitting in front, if I'm a developer, for example.
Very good question for me, I would say.
Yeah, you can.
Don't fight for the question.
No,
I'm very interested in the answer.
Yeah,
So.
you're the second occasion. Then we're going to Paul, because
I
I'm
would
here.
like to say something about it.
Yeah. Hold on.
So perhaps two questions. One is the valuation side. So we had a discussion with some global valuation standard setters. And of course they have ESG on the agenda, but also internationally as well in Germany, as long as you don't have a history of numbers where you can say, look, an ESG compliant building, to be defined what it is, has, I don't know, a premium of 25 bips. We are not there yet on the valuation standard side, but it's clear on the agenda, and I understand that in the US we have seen some initial statistic that there is a little premium already on the valuation side. The other thing is the market side. If we want to focus on, in an investment strategy, on green buildings, again, to be defined what exactly it is, it's a limitation of the market. And if more capital approaches a smaller market, then prices increase. So, and that's something I hear from several investors, sell side or buy side, that they say, if I want to have a green building, or a new building which is mostly green or ESG compliant, is more expensive than another property. So that's for
but
sure.
also maybe on the rental side, because
on the rental as well as on the cap rate side. On the rental side, it's my gut feel is, yes, there is already a premium, but I also hear from others that they say, well, yeah, it's a lot of talk, but if it comes down, you want a green contract, do you pay €2 more, then it's a tricky discussion. But happy to hear
let's go to Arcadia. So Arcadia's join this conference or this topic, I would say. Feel free.
I was very interested in answering the question, because basically we don't see it yet as a developer. So obviously, because we invest a lot of money, obviously, and efforts and to prepare the sustainable, future-proof projects. And all of our, as I mentioned, all of our projects are on top notch, basically, in terms of quality, in terms of the sustainability. A lot of sustainable features is in there. We measure the carbon footprint. We can question about the measurement. As of today, I think it has been said with the green funds, or the focus of the investors on the sustainable projects is the limitation of the market. But we don't see this that investors are happy to pay 10, 15, 20 bips more because of it. It's more probable that you will transact the building than the building which is not sustainable, I would say. So from my perspective as a developer. On the rental side, for a long time it was I would say tick the box on the tenant side. We see this change, that right now it's much more deeper dive into discussions with the occupiers about the solutions, how we can contribute together and engage them into this ESG journey. But I do not see the premium on rents, basically, and even more push on incentives, taking into consideration basically the construction price increase nowadays.
Maybe Rutger, you would like to contribute on this?
Yeah, I think I don't agree with that, because what we see in the market that big corporates prefer to lease sustainable buildings and make choices on that, and that should at the end also reflect into market prices. So I'm strongly.
But they don't want to pay more.
No, but why should they pay more? Because why is it always that if it's sustainable, you should pay more? Because I think there are also some other also financial advantages of having a green building. So I think if companies like PwC, and I think it's a great example, maybe Thomas, in the Netherlands, 2 years ago, the Dutch PwC organization was the first tenant who did a certification, BREEAM certification, overhaul their portfolio, and that it was a starting point of increasing the sustainability levels of all their leased leased buildings. And I think it's a great example, was followed by many big corporates. And I also see that, for example, in the tech environment, that also bigger tech companies are choosing for green companies. So I'm convinced there is a market difference.
I can reply to that. So basically, of course, it's as I said, we will do it for better society. We will. Our goal is to have a profit with purpose, as I mentioned. But yeah, if you do business, you need to make profit, obviously. As I said, non-corporates wants to pay more as of today. I'm not saying that they should, but I said they don't want. This is the.
But you're referring to initial cost, because, or is it investment cost? And then we should go to Paul. Like, what's your perspective from an investment manager who's for the long term investing in these type of assets? So what's your perspective of, well, valuation of sustainability investments?
Yeah, I would like to take it a little bit further, to be honest.
Yeah, feel free.
If you look to the aim, having a carbon zero society, because I think that's the big goal. We have seen the last couple of years that several countries were subsidizing good behavior, but we're now coming to the moment that that subsidizing good behavior is not payable anymore. So you will see that if you're not showing the good behavior, you will be penalized. In other words, the energy price will go up. We see already today that the energy price is going up for other reasons, and that has a big impact, obviously, on your cash flows. Because valuations is talking about cash flows. And in the residential area, we try to talk more and more about cost of living or cost of ownership, which is something different than rent. Okay? So you should include your energy cost on top of your rent. And if a bigger part of your cost is paid to energy, obviously you have to lower your rent. That will impact your cash flow, I can tell you. And it will impact your valuation tremendously. Yeah. That will happen in the coming 20, 30 years, I can tell you. What we also see, especially in the office sector, that already some governments in Europe decided that you're not allowed to rent out office buildings with a energy label above C. So you have to spend capex on your offices to transform them into a C label or level or better. That's also a cash out. That's also impacting your valuation. So I'm sure, I think the last couple of 10 to 20 years, impact was relatively low. I think that will change really a lot in the coming 20 years.
A great answer. And also there's a question from the audience, and I will give a microphone to you. So, thank you. No? And it's always nice to give a brief introduction, who you are, and then the question, please.
Klaus Lengefeld, I'm here for Fair Economics, and magazine, online magazine for sustainable economy.
In the microphone, please.
For sustainable economy. I worked 30 years in the hotel sector and the tourism sector, and we did a lot of research on the social and environmental footprint of hotels all over the world. And what we have seen that if you have a different asset class, if you build a residential area or a hotel, I can give you one figure. We did JW Marriott in Lima on half a hectare. It injects $10 million to the Peruvian economy, most of it in salaries. Of course, it uses more water. So my question is, must you not make a relationship of the eco footprint with the social footprint? We did another interesting comparison. If you give 400 liters of water to a hotel in Cusco, it brings $60 in salaries and $30 in supplies, or $60 injects to the economy. If you would have built a residential area, you wouldn't have had that impact. So must you not in the system compare what is the eco footprint, but what is the social benefit, and not just add on most social benefit and less ecological impact. Thank you.
Yeah, so excellent question. So mainly, what's the scope of the business case, you could say? Well, that's a $1 million question. You can get a bottle of wine. Who?
Let me try.
Yeah, give it a try.
Well, at the beginning also of this session, we asked ourselves why, or you Ron, you said that we were discussing the E of ESG mainly. Why did we do that? Because it was measurable very, very easy. Yeah, we have the taxonomy, we have climate goals, and so we had something where we could focus on. And now we have discussed this, and we are getting aware that social impact or social value is getting more and more important. And so we are to define these goals, because we won't have a regulation on social value. And there we have to understand that the measurement of social value gets from the perspective of the stakeholder, and there is no objective. It's always a subjective measurement. And so so-called business case on social value, I don't know. What do you think?
That's a great attempt, so thank you. Yeah.
I can try with that.
Yeah?
Basically, this is what I said. Once we are assessing in our business, the site, when we deciding where to build the office building or residential building, we do a social consultations, how we can benefit the society, and taking also in this consideration that you have said. Of course, the sustainable aspect of our projects, what we do, is super important for us, but we want to benefit the society as well. So we do this open consultation, and even though that we're getting tough questions, so there's a lot of local community which is objecting against the project because it will disturb for some time to be construction site for 2-3 years, depending on the size of the project, so on. We try to compensate it, of course, because of the project, because of our benefit, but also we always try to add something on top of it. Some extra training for the local, I don't know, teenagers, or the coaching sessions, mentoring sessions. We have programs which we can drag in the local community into this what we do and benefit, or maybe educate them a bit more, or give them a bit more chances, better chances to get the job in the future.
But maybe Arcadius, then a simple question, what about the revenues? Because when you're doing extra, are you also getting paid for the extra?
No, not necessarily.
I think that's
not necessarily, because you can share this what you get, what you have already. You can benefit the third party, which is contributing at the end from your business, but they're getting something more. They're getting knowledge, they get the education, they're getting experience, and so on and so on, which will benefit out later on for them.
Yeah, but I think in the end you should see the revenues. Otherwise, you won't be stimulating to do better or outperforming. And I think, therefore, thank you for your question. Very relevant.
Yes, but if you believe that this is a good thing to do, you will do it anyhow, not necessarily measuring the profit on that.
Wow, I'm also stimulating. So in line with Andy, I'm not. It's great. Keep on going. Keep on going. Also, happy Richard, you're part of the story, and also because we have like roughly 100 attendees online. And also, is there any specific question from the audience? And I will give you the microphone.
Thanks very much, Ron. There is just a quick question that's come in that I'll pick up, which is really around, which says, will investors give back 10% as a trickle-down effect for the poor in Europe? So it's quite an interesting question about whether or not there's ways, I suppose, that impact investment can also have a more direct effect. There's obviously, the affordable housing side. There's all of those things that are happening. But it would be that's an interesting one. I don't have an answer to it for certain, but I don't know if anybody else does.
Yeah, or also maybe we should brand it positively, not a discount. But Paul.
Yeah, perhaps good to mention. It's also a little bit in relation to the question before. I think we focus more and more on well-being in our assets. So that goes for the resi, that goes for offices, that goes for retail. That really goes about, is your end user happy in your building? And I think the Europaid is eventually the end user in your buildings. If you create a very good environment, the well-being of your tenants will increase, and that will lead to a lower vacancy level, lower turnover rate, lower maintenance costs. And we already see that in our portfolio. So we have a big project in Amsterdam, and we really try to focus on well-being. So to make it green, have affordable rents, create community managers, because loneliness is really a big topic in the big cities. So we really try to create a very happy and nice environment. We measure our tenant satisfaction of every asset in our portfolio. In Amsterdam, in general, it's always an issue. So we're around about 6. This asset in Amsterdam scored 9.5. So 3.5 higher than the average of the Amsterdam portfolio. And we could also see that the turnover rate was 5% instead of average 20 in Amsterdam. So I'm really sure
that's a positive measurement.
That social impact is really helping to create a better portfolio. It helps your tenants, but it also could increase your returns. Obviously, if you also talk about affordability, you have to give something back. But in total, it's not always the case that you should have a lower return to be a ESG-minded investor.
I think it's a superb answer also for the audience. So maybe final question for the audience, also in respect to the time. Feel free. Then I have $1 million. Oh, feel free.
One more thing.
Yeah.
In the last half an hour, different types of measurements came along, like GRASP, like WELL, like BREEAM, like your own measurement. I would urge the whole real estate industry to converge to use a single or only a few different types of measurements, because then we talk the same language, then we know how to measure it, and then we can really make more impact there.
And maybe a question, is it something in terms of goals of a journal like this, where we try to create alignment in the value chain? Should it be one of the goals of this journal to create this type of standardization, measurement, valuation? I don't want to be the game changer of Thomas's business case of PwC, but it's part of the journal. So let's share.
That will definitely help.
Yeah, I think that's also the final question for all the expert panel. Like when we look like 5-10 years, what should be the impact of this journal? What is the key topic? Is it like benchmarking, or is it like also try to make alignment with local governments, who are a very crucial stakeholder, to my opinion? What do you think, Michael? Your final thoughts?
My final thoughts, yeah. I think the main focus is still on reducing emissions and green buildings, of course. But what is green? We need to reduce emissions. That's the first goal. But apart from that, to improve social value, we need to improve well-being. And we don't exactly need so much regulation. It's up to us. It's up to our business to define these goals. Especially for the S of ESG. And I'm happy to discuss this in the next years and to define it by ourselves.
So less legal, actually.
Less legal, yeah.
That's a nice one-liner
let's kill all
from
the
CMS perspective. Andy, what's your final thought? In the mic, please. Yeah.
So I'm going to say 2, if that's all right.
No, only one. Sorry, I'm not Richard Betts. Okay. Just one.
All right, let me go with it. The one thing we haven't discussed at all, one thing we haven't discussed at all today, that maybe it's a separate panel. Where are the resources going to come from to do this? The people. I don't mean the finances. I mean, where are the people resources? Because I don't see a huge pipeline of trained, developed, informed people who right now could deal with this. We've done some calculations, and we think there's a shortage generally just across Europe of between 7,000 and 10,000 informed ESG specialists to do some stuff with it. Where's that going to come from? You know,
well, let's make a photo of the crowd and the panel. I think it starts here. That's actually also the one line of Michael. Let's start today.
Yeah.
And with yourself. You're one of them.
We need an awful lot more. And I think that will be one of the biggest challenges over the next few years until that pipeline feeds through.
Great. it was one actually. So thank you, Thomas.
Yeah, I think the the focus for the next years, not next year, for the next month should be really on global standardization, clear KPIs, clear measurement. You have to know what will be measured from a regulator, from the banks, etc. To focus, and after the standardization with data models, etc., it will be much easier to get us the next push on ESG, on the ESG journey. Because until then, and until we don't know what's really where we should move, it's not moving fast enough. So standardization, clear KPI setting, and that's something where a magazine like this, with our support, would definitely help the market and the market participants to improve and speed up the journey.
Superb. Arcadius, next to the EXPO Real announcements, but it's about our lounge, so they're all coming over here.
Complementing this, what has been said already, but I of course agree. I think it's also about raising the awareness and sharing the best practices among those companies who are the front runners. I think this also gives those who are a bit lagging behind or they don't have the clear strategy, maybe to pick the best practices from the market and really jump on it.
Superb. Rutger.
Yeah, for the coming years, I would say that above regulation, certification, etc., leadership is the most important to make the biggest impact. And let me finish by giving you a big compliment, Ron, that you started this whole process, bringing those parties together, and I hope we can really make an impact in the coming years.
Thank you.
Yeah, for me, what's very important is knowledge sharing, because it's quite a journey. It has been a journey the last 20 years. We had a lot of pilots and experiences. We share everything because we think it's in favor of planet Earth. So everybody who would like to know how we do it, we are willing to share our info. But we also would like to learn from our competitors and everything that is done in the business. So information sharing, that's the most important.
That's key. Perfect. Yeah, well, we are on time. And Richard, I would like to give you the floor, and also because I think it's, well, let's call it leadership, that maybe we are the people who are in the spotlight, but I also would like to highlight your colleagues, Frank Byborn, but also Thorsten Herbert, because most of the people behind the scenes, these are the drivers. So not only the thought leaders in the spotlight, but so also big compliment. But the floor is yours, Richard, for the final words.
Thanks very much. And thank you, Ron, also for moderating this session and for helping in terms of the initiative. I mean, one of the things that we've been keen to do in general, and actually we're sitting in an example of it now in some ways, is do things that are around sharing insight, sharing knowledge, bringing people together, and really trying to create industry initiatives that have a mutual benefit and a positive for the industry, and hopefully in this particular case for the more general world in some ways as well. So thank you to everybody who's contributed to Impact. Personally, it's something that I know that we're very proud to have launched here today. And it's something that I think is going to be a huge focus for the industry going forward. I can just see actually some drinks arriving, which is very good.
We have to celebrate.
Which is probably a sign for me to stop talking, I would imagine. But yes, so please do join us for a celebratory drink. Thank you to everybody for joining us. I'm sorry we can't share that with everybody online, but for everybody who is lucky to be here in the audience, do join us for a drink. Thank you to all of the panelists. Thank you for joining us. Thank you, Ron. Let's give everybody a clap and then have a drink. Thank you very much.
Yeah. And really, let's make a photo.